3, 2, 1, 0. Ignition. Liftoff.
My name is Nick.
And I'm Yuri. You're watching Moontower HQ.
Today, I think it's pretty clear that Bitcoin is in a bullish posturing as the dollar continues to head lower, which will be the topic of discussion for today's chat. First and foremost, it has been very evident from the last 6 or 7 months that the Fed is completely aligned with unlimited QE, if you will. Supporting the economy is one of the only ways that they see through this particular scenario. And fundamentally, there's not much care as to what happens to the US dollar as a result. There are many speculations as to where this can go. Of course, if you're looking at basic monetary policy and basic economics, inflation is one of the biggest worries moving forward. However, if you dive deeper and look into the constructs of how the economy is actually structured and handled, this might not necessarily be evident in the way that people think in terms of the straight devaluation of the dollar. In fact, it might actually come to fruition in prices of goods as well as other services. So inflation in the consumer price index rather than deflation of the currency, or sorry, inflation of the currency itself. With that being said, this monetary action has also caused ripples to the US dollar's presence as a dominant currency on the world scale. As a result of the weakening of the dollar, it's very clear that within the next 5 to 10 years, the US dollar is not going to be around as the world reserve currency. There are speculations that the yuan might come and overtake this. However, the yuan currently accounts for only 2% of global trade, which is a fraction of what USD and Euro currently hold. And what the trends are, in fact, as of the last month, is higher inflows into the euro from the dollar than any other currency. Whether the euro becomes the reserve currency is also a question that is yet to be answered. However, I would speculate that it would also not be the dominant currency moving forward as a result of the difficulty in conducting monetary policy for a series of nations rather than one unified one such as the United States. Conversations, and this will be a topic for later discussions about SDRs, special drawing rights from the IMF, and how that can come to be in the future, the world reserve currency, will be discussed. But for the time being, the focus is on what are people doing as a reaction to this, not only just from a personal standpoint, but also from a national standpoint. When we talk about the personal, there's clearly some trends that are going on where people are moving away from riskier assets and into more stable ones. Yuri, what have you seen currently going on, and what asset classes are people favoring as a result of this dollar devaluation?
Well, I think that it's clear by now that when we look at the prices, the assets that are going up in prices the most right now are gold and Bitcoin. Bitcoin has been doing extremely well in the past couple of weeks, as well as gold, which reached, as far as I believe, as far as I remember, $2,000, which is the all-time high. This signifies that a lot of investors, including young ones, prefer the hardness of sound money like gold and the hardness of Bitcoin, which they are just learning now, to all the other traditional assets. And what are the other traditional assets that they have to choose from? Well, clearly they cannot keep their money in fiat because fiat is losing its value pretty dramatically. And it's clear that all this quantitative easing, all this endless printing will result in even the dollar losing its value dramatically, and perhaps, as you mentioned, losing its status as the reserve currency of the world, upon which all the other fiat currencies in the world depend. At the same time, there is also stocks, but then the stock market has been doing well, but how well has it been doing if if you look at it from the perspective of someone who understands how this whole cycle works, right? Because first they print a lot of money, then they give these almost free loans to the companies that buy their own stock with the money that they borrow and prop up the prices of the stocks. So is this market sustainable? I don't think it is. So again, the stock market as an investment or as a safe haven is not really an option either. So what else do we have? We have real estate. Can we really rely on real estate at this time, especially during this pandemic? Probably not. If you can see the headlines, lots of people cannot rent out places anymore, and even if they rent them out, a lot of the tenants cannot afford to pay rent anymore because there's just no jobs anymore. So in this type of situation, commercial property doesn't make sense either. A lot of real estate is already on sale, and there will be a lot more for sale in the coming months. Where do we turn from all this? We clearly see that the assets that have historically provided more or less stability were hard metals, precious metals like gold, platinum, and even silver. A lot of people believe that silver has something to offer as well, and it's been doing quite well along with gold in recent weeks. But I think for our personal interest, gold would be the most interesting proposition, namely because Bitcoin, which is the currency of our choice and the asset of our choice, has been modeled against gold, has been modeled based on gold's properties. So Bitcoin is essentially digital gold. However, Bitcoin has more advantages than gold, as we discussed before, such as transportability. There is a clear and finite supply of Bitcoin, and it's a censorship resistance and unconfiscatability essentially is what gives Bitcoin a lot of headway, I think. So we see that both young generations and older generations, they tend to go to these hard money type of assets, gold and Bitcoin being the major ones.
To add to that, what I find very important to mention is the fact that real estate and stocks in particular are not as stable as people believe them to be. And this has been evident very much in the figures. So statistically speaking, when you have been looking at the holding period, the average holding period for a blue chip stock, in the past, usually the time horizon is anywhere between 2 to sometimes even 4 or 5 years. From 2020, especially from March, the holding period has only been 5 months. Let that sink in. 5 months. That means people are incredibly fearful of the long-term sustainability of these assets. And for exactly the reasons that you mentioned, it's reliant heavily on the money that's being printed. With regards to real estate, commercial real estate, as well as private real estate, funny thing, I was reading just recently an article from, I forget what publication, but it was talking about the UK and how they are actually putting in regulations that say that a house can be bulldozed if it is seen as somebody who lives there is infected with COVID-19. That basically gives the government the right to demolish your home if they see it as a threat, no matter how much you paid for it, whether you bought it outright, your family has owned it for generations, or you recently just came into it with a mortgage. It doesn't matter. It's going down to the ground. So that's literally the most physical way that you can say that your assets are not likely to have a long-term life. People buy real estate to pass it down generationally, usually, or at the very least as an investment, which has certain other criteria. But the fact that it can be destabilized so easily just goes to show how very fickle the environment has become for those types of asset classes. And of course, as you mentioned, Yuri, people are moving into gold and Bitcoin in particular. Gold seems to have more of a older type of following. This something that they felt more comfortable with. It has survived many of collapses and financial restructurings, if you will, and kind of come out long term as the preferential way to store wealth, even before really markets were invented. If you look back to the Egyptians, if you look back to Greece, gold was always prominent, and for many reasons other than its ability to be used as currency, it has actually been valued in cultures in the past. And highly recommend reading Saifedean Ammous, The Bitcoin Standard, if you want to learn a little bit more about how gold became so prominent in today's society as well as societies of past. Coming back to Bitcoin in particular, I believe it was an article by, or a quote from JP Morgan, that they have seen the highest influx of millennials and younger individuals coming in to the Bitcoin space and buying it. And this is an interesting trend because ever since the lockdowns happened, what I've noticed in particular is that there's been a very heavy influx of young traders, not necessarily young investors, but young traders. You're stuck at home, you're not going to school, you have access to a computer, and there's websites like Robinhood who allow you to open a trading and a brokerage account in literally minutes and get up and running and get it funded. So you can trade stocks. You can also go and sign up for a lot of the cryptocurrency exchanges, which are not KYC AML, and be able to trade that way. Fundamentally, you have a lot of individuals that are flooding in and putting money into Bitcoin. My personal question is that, are they coming into it because they sense that the dollar is not as strong as it was before, or the economy has issues moving forward and they're coming into it from fundamental principles? Or are they coming into it because they see it as an opportunity to make a lot of money? And by that logic, are they coming into Bitcoin, and are they also coming into altcoins and projects that are considered ghost projects, basically only alive because they happen to get a lot of funding in 2017, but fundamentally they're completely a dead protocol underneath? I won't mention any names, but I'm sure our audience can speculate as to what those are. So that's kind of my question is, do you think, Yuri, that they're coming in fundamentally because they believe in what Bitcoin actually has to offer, or are they coming into it because there's just new wave of investors, there's really nothing else to do, and cryptocurrency in general seems like a very good speculative marketplace for them to play in?
Well, I think you have to probably understand the psychology of the two types of these individuals, first the investor and then the trader. I would say that the investor is someone who buys Bitcoin, for example, and holds it for a long time. That would be considered an investment. So it's a long-term hold. In our world, in the Bitcoin world, it means you never actually sell Bitcoin because eventually you'll be able to spend your Bitcoin on any goods and services in the future, because all of them will be available for Bitcoin. And the second type of individual is the trader, who I think does what he does to actually make money. It's less, the investors also make money, but they kind of do it with the long term as a long-term goal, with a long-term goal in mind. However, traders, they want to make a living rather than invest into something and wait for a long time for it to bring some fruit. So a trader would make a small investment into a trading strategy and then start trading in and out to increase the value of the account. And very often this account is actually not in Bitcoin, but it's denominated in US dollars because that's what they want to see grow. So I would say the reason why they come in is to actually just make money. And they are coming in Bitcoin because Bitcoin has appreciated in the past few weeks, and they just see that this is the asset to be trading right now, because the volatility of Bitcoin, its notorious volatility, is really good for for making money by traders, by experienced traders, because that's how traders make their money. If the price is flat, it's more difficult to make money. But if it's more volatile and moves up and down, then that's what traders like. Now, would I recommend this activity to people? Personally, I would not. If I had a degree or some kind of a license in investment advisory, I would just tell people, you just buy Bitcoin, hold it, and thank me later. Or not. We never know what's going to happen, but the likelihood of it going up is pretty high, as we have seen historically happen. Because trading is an activity that requires a lot of not just skill, but also a lot of mental toughness. So you have to be very, very strict. You have to be very disciplined, and you cannot let emotion guide your trading decisions. And unfortunately, very, very few people have these type of qualities that allow them to really win in trading. And as we know, in trading, 9 wins is still not a win if the 10th is the loss, and where you lose all your account. So yeah, just whenever, if you're thinking of between these two options, just know what you're getting into, and definitely maybe consult with someone who has done that before. And I would really caution you from trusting any influencer on the internet who claims to have magical trading strategies that will make you 10 times more money in 1 week. That's definitely a red flag, and be careful.
And really what's interesting, if you actually look at the breakdown of what's happening on the blockchain itself, is there has been a high influx of actually Bitcoins going off the exchange. So a lot of the exchanges are reporting record lows in terms of the Bitcoins being stored on their particular platforms. And the reason being is because it seems that most people are actually preferring to invest into Bitcoin as a hedge against the current economic times, rather than go into it with a mindset of trading. And as you mentioned, trading in particular is statistical gambling, if you will. And unless you have a particular mindset that is aligned with understanding how that works, you are going to be very prone to emotion, and you are going to blow up your account. And most certainly, any individual that does tell you otherwise and that they can sell you a strategy of some kind, that's where they make their money. Because if they actually could, and that strategy worked, believe me, they would not be selling it to you. It would be very kept tight and under wraps. So with that, we want to ask our audience, what kind of person are you? What did you get into Bitcoin for? Is it for the core aspects of Bitcoin as a fundamental sovereign money, and are you investing into it? Or are you coming into it because it's a very highly volatile market and you're interested in trading? Let us know in the comments below. And with that, my name is Nick, signing out.
And my name is Yuri. Thank you for joining us, and check out moontower.co.